Hi, I'm TradeSpotting, a professional trader here to give you market update and insights into the future of price action. I have to interrupt that guy. I come to you many hours later, having crafted such an exquisitely fantastic video that you will possibly be endangering your health just by watching it. Though I need you to watch it all, the reason you clicked might be for GameStop content. Now, while it comes at the end, and there's probably concise chapters that take you exactly to that point in the video crafted by our fantastic, beautiful, wonderful, amazing, intelligent, brilliant Lisa in the comments below, or perhaps even chapters in this exact video so you can skip to it. I would appreciate you watch the whole thing because it's such a very good video and watch time is so very important to the algorithm, as is your likes. Hit that like button, but watch time, that's crucial. Also, the GameStop section, it does constitute a very large section of the video. It's at the end, but in order to get the most from TradeSpotting, you really ought to be consuming every single morsel. So I'll get back to you presently. That's where the GameStop stuff is. Though, watch everything, hit like, and support me and stuff. We use to exploit these big moves. We'll also take a look at two fax requests that came in. One from Shorta regarding PayPal, and another from Mr. and Mrs. Anonymous on Cardlytics. That's CDLX on NASDAQ. We're going to take a look at those two fax requests. But the top news was the fax from Tubes. There was two, one very generous donation, thanks so much, my friend, and the other, a really nice message. I remember the first time you got in contact with me, Tubes, and I really appreciate you. So this message also really appreciated. Thank you and Rocky for all that you do. I'm always learning, always improving, and always inspired to work harder and get better due to the both of you. Well, that's a brilliant message. Rocky will love hearing that, reading it, and so do I. Thank you very much, mate. As I say, remember the first time you got in touch. Thanks for still being here. Thanks everybody for supporting what I do. If you'd like to take part in that, links in the description below, and the like button is en route. Now, we're en route to the charts. Thanks for being here. I appreciate you.
Bing Bong, the price is wrong.
Market cap 620 million. Average volume traded 708,000. But today, there's only been approximately 500,000 shares traded. So significantly below the average amount. Yet price is up 7.62%. So price is going up despite the volume not being there. Often you'll hear new traders, those nascent little chickly D's, on the early stage of their trading journey, talking about how they need the volume to come in. They obviously assume that volume would be in agreement with them, but for every buy there is a sell, for every sell there is a buy. That's the way the market works. Top tip. So volume, it's not the be all, it's not the end all, and price without it is doing quite well today on Cardlytics. Let's take a look at those detailed charts. Here we have the weekly time frame and the entirety of price action on this guy since the IPO, the all-time high, absolutely really strong retracement there that took price down again. We had a potential long entry on this thing from $6 to 10, which worked out well. Inverted head and shoulders and the potential for price to go on. So a lot of people will be in this trade. Talking about this inverted head and shoulders that we have here. This is one shoulder. Do you want to give me the drawing, please? Here's the head. Here's the other shoulder. Where is my drawings? I'm definitely actually doing drawings, but they're not showing up. So there's an inverted head and shoulders here, right? And price action, there we go. Just like that, right? Abracadabra. So you've had the measured move from this guy, and that's the target to the top side. If you were following it with a stop, congratulations. If that was yourself who initially faxed about this back in March at the lows of the market, then fantastic. We got these or if it was in around June on this excellent opportunity. And that was the time to enter this trade on the right shoulder, whence the formation had presented itself. That being this inverted head and shoulders on the weekly time frame, where price action going back above the neckline also took you back above a 236. Holding that meant a 50% retracement wasn't out of the question. If the uptrend persists, you'll be looking for a golden pocket at $33 and a test of the 236 from the all-time high to the low in March. Last low there, back around April, March 2023. So the 236 retracements at 41, giving us targets above of $20, $33, and then $41. That's a very, very ambitious target, considering it's already done a very extreme move from the low at 2 to the most recent peak at 18, and a very, very strong trade. So if you got in on this one back then, if it was yourself that faxed about it, great to see. Great to see the TA working out so very well, and I hope it's helping people. Let's zoom in some more then, get this head and shoulders center stage. This is the measured move from this formation. Price action exceeded that and made the 50% retracement. At this stage, you'd be looking for holding the 236 of this move, potentially, which you could take from that low to this high, abracadabra, at 15.48. You know, price action did slip below that there, at which point it put in the weekly low, bounced. That was the previous high. So in this uptrend, you can find lows. Those lows quite commonly will be confluent with previous highs, as we saw in around these levels. Holding that horizontal is very significant. Then in future, if price action is to start going sideways, you could anticipate a number of bounces at that level. You can also look left and see that at that area we had a significant group of trades here that provided a touch of support as price action was falling down. And so being back above that level is significant. It puts it in context then. We'll go back to the previous trend, that which took price action into this move. And you can see you're looking for the 236 at 41.31. So that's what you're talking about if price is to move to the top side. You got into the bullish control zone. You've slipped out of it here most recently. Price action isn't threatening that most recent oscillation to the top side yet. I would look to this candle and say at the bottom of it, we could see 50% retracement. That's 1691. Currently trading at 1639. So if it's to close, especially on a daily candle, which we'll get down to in a moment, back above 1691, $17, I'd say that would be very significant for Cardlytics. And you could be then potentially anticipating moves to $19, followed by those targets we mentioned, 20, 33, 41. That's all where you'd be looking to if price action moves up, when to judge if it's moving up, and at which point to take the trade. 16.25.382, you've already exceeded that at the moment. I wouldn't say that in and of itself is significant. I'd be looking for 50% of the prior candle, that being an impulse move. If you break that, continuation of the trend, my friend. That's what we're thinking. So that's all on the weekly time frame, and the only indicator off chart we used was the RSI, going entirely on price action and measuring it with the Jamie's magic measuring stick. On the daily time frame then, they've got a rocky outcrop flash up at $126. There's a gap that'd be closed at 115. You'd meet it at $99. It's very close to 100. And then anything targeting this significant area here. An awful lot of trades at that sort of level. Both areas here presenting gaps. If you're enjoying this video and getting something from it, whether that be of educational or entertainment value or anything else, please think about hitting the like button, subscribe button, joining, becoming a channel member, and investigating the links below to support the channel. Thanks very much for watching. Appreciated. It does seem very much as though most of this Cardlytics life has been spent around, I say most of, the median price, where a lot of interest has come in at this thing. Again, another peak that rested around those levels and a gap. So it's not unheard of for this thing to make huge moves to the top side, give up 90% of price action, and then continue to put in higher highs. Has then come down, tested that most recent high, and put in what could be seen as a head and shoulders. It's given up everything that it ever did, and then some. IPO'd at $9, so lower than it ever been. Those all-time lows come potentially with that bottom information, that inverted head and shoulders, and price action now increasing. After an inverted head and shoulders, you might like to say 3 rising valleys within this uptrend. We don't necessarily see that yet. It would also be good to have harmonics leading into this reversal formation. You don't also have that immediately showing up on the daily time frame. On the 4-hour, I think we need greater detail than that, don't you, TradingView? On the 4-hour, it's strong uptrend. You'd be worried about losing $13. You'd get an early signal things were wrong if price action dropped below 14.39. It could possibly slow down at 16.70, 16.75, 16.80, and that wouldn't be something to panic about unless, of course, it then drops below 15.48 without any sign of strength. 15.48 is your warning sign, especially on the 4-hour time frame. If price action drops below 15.48, I'd be very, very cautious. If you get there, that first test might be a good entry. I'd say it probably would be. If I turn off my drawings, you can see from Rocky's indicator here, tested the 236, prior daily low at 14.13. That would be a good area for a stop. If price action exceeds this low, it's probably coming in testing $11 and change. If you're talking about pushing on up, you have to beat the prior monthly high to get above $17. At that point, the trade is on. If the entry is at the prior daily high at 15.40 and price action retraces, having found resistance at 15.40, first entry, potentially a good place to take a trade. I wouldn't want to be holding it below the 236, so I'd manage that with a stop just around $14 or below, tight there. I'd want to keep my entry as close to the stop as possible. And obviously you can see the flash here back down at 6.30. So if price action is to make its way there, then it could also be that you see a head and shoulders. You've got one divergent peak already. This could be a right hand shoulder, and then you'd be looking at the measured move back down again, which, just like those we've drawn previously, looking at this ticker, very, very likely that you get there if it does break down. Previous price action is no guarantee of future results, but something that mirrored itself like that provide a degree of symmetry. And in at around $6 is also where you've got a rocket outcrop flash, which this has been very, very successful on this particular chart, as it is on all of them. But it's so very much here with this guy, despite it being on the other side of the trend. So I'd be very cautious about this because of that potential on the 4-hour. You have got an awful lot of continuation divergence at this most recent move and throughout that trend previously before it put in the divergent peak. So I wouldn't be too worried about it until the breakdown happens. But oh my goodness gracious me, that is a strong move up to a new high on the oscillator, but not quite such on price action. So we end, unfortunately, Cardlytics with a little touch of cat vomit. Thank you very much for that one, Mr. and Mrs. Anonymous. I appreciate you very, very much. PayPal now, PYPL. This analysis provides an impartial overview of PayPal Holdings Inc., that's NASDAQ PYPL, I shall focus on recent developments and financial performance. The evaluation takes into account key factors such as revenue growth, margins, Venmo's role, the recent CEO change, the buy now, pay later segment, financial stability, valuation, and the associated risks. I'm TradeSpotting, I think, a prominent source for PayPal analysis. I have closely monitored these developments and the PayPal stock price for a while now. Financial performance is our first headline topic. Revenue growth at PayPal has slowed since the pandemic, but still putting in a 7% increase in the 6 months that ended in June. This isn't completely exceptional, but the growth is notable given PayPal's extensive reach. A lot of people would have told you that they'd reached market saturation, but they're still finding new avenues of growth. Operating margins have improved by approximately 250 basis points compared to the previous year, which reflects 3 consecutive months of margin enhancement, which is a very positive factor from a quantitative analysis perspective. That is to say, the quant firms who'd be looking at these sort of fundamentals. Total payment volume continues to grow at the respectable rate of 11%, and active accounts remain at over 400 million. Venmo's growth has slowed now, but its inclusion in the PayPal portfolio is expected to contribute positively if growth reaccelerates. So they have that degree of an afterburner should the trend really start to kick in. The CEO change now onto the boardroom. The appointment of Alex Kreis as CEO may bring fresh perspectives and opportunities to the company. His successful tenure at Intuit suggests potential for positive change at PayPal. He specializes in exactly the sort of areas you would be hoping for growth for PayPal, so a great choice. BNPL segment, that's the buy now, pay later. It shows significant growth potential, projected at approximately 46% through 2030. So a huge underlying asset there that could be exploited to a much larger degree at PayPal is the idea of credit. And it looks as though that might be a very good future as interest rates will stay higher for longer. An awful lot of opportunity and time for PayPal to orientate themselves to exploit that. Financial stability now, as of Q2 2023, substantial liquidity, $9.9 billion compared to long-term debt of $10.5 billion, which is indicative of very manageable debt levels despite the current interest rate. The company's current ratio of around 1.3 suggests that it can cover any short-term obligations. Metrics such as ROA, ROE, ROTC improving, indicating more effective asset capital utilization. So leaner, stronger PayPal. Valuation. PayPal's share price has decreased significantly since January in that extremely strong and relentless trend. It makes it then more attractive from a valuation perspective. That is to say, as the overall share price and market cap of PayPal has decreased, the fundamentals have in tandem got worse and worse. But as a value proposition, that is the return on capital that's available via PayPal as a business is now a more attractive value proposition. That goes along with their brand value. So that's how we look at the valuation. updated price targets then to come after a quick look at the charts. But before that, remember to manage your risk. The risk associated with this valuation from a fundamental perspective is that there is the potential for prolonged negative sentiment on this stock. It's persisted in this trend for a while, and we should look for continuation. That would lead to further share price depreciation. There is plenty of uncertainty surrounding the new CEO and his ability to steer the company effectively after such a period of stagnant growth. There's increased competition, which might lead to a drop in active accounts at PayPal if they fail to differentiate. There's also the slowing growth at Venmo. Ongoing macroeconomic headwinds don't bode well for the current trend. This includes the projected continuation in the rise in rates and the fact that they're likely to be higher for even longer still. This is expected to impact the stock price for the foreseeable future. So in conclusion to this section, PayPal demonstrates stability in its financial performance and its promising buy now, pay later segment. Recent share price declines do make it a more attractive value proposition from that standpoint. However, uncertainties surrounding the CEO and the macro situation warrant attention and potential risks persist. So the current valuation appears attractive, aligning with my previous assessment. Now let's look at the charts. PayPal. We'll start on the weekly time frame, which is where we can put everything in context. This is PayPal on the weekly time frame. We have the previous analysis up here that shows us PayPal in a downward sloping formation. We call it a wedge. A number of touches on the top and the bottom. If you're a follower of Rocky and I, if you've taken the course and understand how we approach chart formations, you'll know that you take this measured move from this wedge, from the lowest to the highest point within the formation, or vice versa. That you take that formation to the apex, then the measured move. And you can see that what commonly happens with these wedges is that they turn into a channel if you see continuation. Now, you know how these two lines are parallel. I just drew that out, but I can show you by cloning this top guy, dropping him underneath. And you'll have noticed two things there. One, I gave the line a gender. And second, it reaches the measured move from that formation it came from. That would be with continuation and this formation breaking down. It could well break to the top side, at which point you would take this and put it up here and see that the next target, should you break up, is the 382, which is also the previous high from within the formation. That would be where you'd be targeting if you were to exit said formation to the downside. So the first target then, in around here, this is an intermittent high. If it should be that there's a fake out on the go and PayPal moves up, doesn't complete the full extent of the measured move here as we see it on the weekly, then it may well be that it only goes as far as 91. Ahead of that, there's a 236 at $84. So I'd have a lot of attention at $84 if price action got there, because you haven't yet completely defeated this formation and may be in for a retest. That should be, if price action makes it above that level of resistance on the diagonal, it's still got a horizontal to break at that level, at which point it likely looks for support at the exit point of the previous formation or at the continuation of said resistance, and then finding support moves to the top side, at which point you've got another target, 382, and this intermittent high in at around 97, call it 97. If it makes it back above, then you're up at 110. And if you can make it above there, you've got other targets such as this peak at the beginning of a formation, which is around $120, the 50% retracement, which is at 132, and then the golden pocket all the way back up $161. And if PayPal is breaking bullishly out of this formation, that's where it's going. If you see continuation, that is the formation breaking down, and you're looking for price to head towards support, then it may well be that you find it in at around $35, $40, 37, let's call it, be on the safe side. In at around $37 might be where you find really deep value on PayPal from a speculative perspective, where you would be happy to take that risk up to, say, $72. And when we get off the weekly time frame, I'll show you why that might be a small target from here, but a massive target from the next potential area of opportunity, and then a huge risk reward for those people willing to take that risk. So now down to the daily, where you'll see some of that information. I'll start by deleting the vast majority of drawings here so that it's clearer and you're more able to see what's going on. So this most recent leg of the trend has seen price action continue the overall formation, pushing downwards again. And here you are meeting support in the wedge. If it pushes any lower, it will depart from that previous level of support at $57, $58, essentially where it closed today. I know it moved up 1.46%, which if it did every day, you know, you could invest in PayPal and laugh your way all the way to the beach, the bank, wherever, right? Somewhere with a big beat, right? PayPal, daily time frame, holding the formation so far. Does that represent opportunity? You're in at the sort of areas where it has done previously, not these. These were extremely risky zone on PayPal. Doesn't need to delete that guy, but this one and this guy. Sorry, we don't need you at the moment. And you do rather dominate what we've got going on. Excuse me. Thank you very much. And do you want to? Right. So in around these levels, stretch it out some more, you can see that there's a gap, right? There's a gap. The bottom side of that, $67. Top side of that comes in at around 72, 73. So if PayPal is to get bullish, because the fact that it's in around previous levels of support, those levels have persisted at least since last August, right? A year. And at the same time, when price action is at these sort of levels, you see this is where we found a low, and then you go down to the momentum indicator, you can see what was going on at the time, as is also true here. Well, then you can see that this current picture isn't all that different, right? So this is where price action tends to turn around on PayPal, but it's also very true to say that then meets resistance. It has a very strong initial move, and then it hits a level of resistance which takes it back down again. So once you conquer a diagonal, that's not really what's important in PayPal. It's all about managing to break and defeat this trend that's been on the go at the minute. And even with strong moves to the top side, you don't do that, you know, so you could move from 58 to 68 and not close a gap, not break a golden pocket. You could exceed that and get to 72 and be at a 786, even push up to the 886, 73, $74, and still be within the downward sloping diagonal and not having yet reached the apex of the formation. So more pain is likely for PayPal based on the probabilities, of course, and perhaps it could break that trend. But on the daily time frame, you're seeing an awful lot of negative artifacts. That does give you somewhere to aim should price action turn around, but it would have to turn around as it is going the wrong direction. Here on the 4-hour time frame, at least you can see that there has been a number of consecutive positive periods, which doesn't tend to last, even though you can see they've happened previously here, only in order to get price action back at resistance, and then appetite for the bears, right? That's where they find a lot of supply in this current trend, and they pounce on it, right? It's a lot easier to push price action down when you have volume, if that is your intention. Right? Especially if you yourself have got a large position. So volume is not necessarily your friend, as I touched on another video we made today. And you might be seeing all of it if you're watching the full picture of TradeSpot. And thank you very much. And if you're giving the channel that watch time, it's really appreciated, because that is a very big stat in terms of the algorithm watch time from subscribers. So thank you very much for that. I appreciate it. So I try to do the best I can in terms of value. So if you think it's going both ways, hit the like button. So you've got an awful lot of reasons why you might have an opportunity, but you've also got an awful lot of areas which, despite presenting an opportunity, are also very tough in terms of resistance. That itself, a 382, the bottom side of a gap, previously a support area. It's very unlikely that price action does break through its immediate resistance on the first attempt. It's been in a very strong negative trend going against you. So it looks tough for PayPal in the short term, and in the medium term, and on the long term. It does obviously offer up lots of opportunity with regards to value. You can see previous flashes there filled on the weekly time frame. But a trend and its evolution from a wedge to a channel, still very, very possible. If the overall economy is going down, it would be unlikely to see PayPal move to the top side with a market cap of 63 billion and average trade-in volume of 13 million. It's not your typical squeeze stock. Trends in this one are very serious, and well managed can make you very wealthy, just as waiting to be right can. Thank you very much for watching this PayPal segment. If you want something similar, a take on any stock you might be trading, I'd be happy to make a video just like this for you, tailored around your specific trades and your thoughts, giving you my perspective on your charts. If you like, use the links below and support the show. Be appreciated. If you did it once a week and everybody who watched it, imagine how amazing we could make this channel. It would be fantastic. Thanks very much for everybody who's been supporting the show recently. You are appreciated. Hit that like button. Check out this and other videos on the channel coming soon. Great takes on a number of things today. Thanks very much. Hit the like button and check out that video Rocky's got up from yesterday. Also, check out his Bitcoin video. Start of that show talks about it, but also last week he talked about Bitcoin and the really important levels that you were going to see. So, and we are going to see them. So, already met a couple big moves this evening. Definitely worth watching. Very entertaining video. I promise you'll enjoy it and get value from it. Thanks for watching this one. GameStop now. I'd appreciate your thoughts on this news article I'm about to go over in the comments below. So if you could let me know your honest opinion on its motivations and its content, I'd appreciate it. I'm going to read it out to you now. And then I'm going to get into the technicals and what we'll expect from price action. Before any of this, I'd like to point out that GameStop's earning calls over the past 6, 7 earning calls, they've become increasingly better. The improvements are there for everybody to see. And the quantitative analysis of the GameStop's performance with regards to earnings calls, expectations, and then results would be positive and would be, at the very least, a hold. All the analysts that you're likely to read about will give you a strong sell rating, yet that's been the case for a number of years. And then the main media outlets are all also, and in tandem, very negative. So this article, GameStop's demise assured with the new CEO, Wedbush says. So, I mean, I'll stop you right there. The new CEO is the executive chairman. It's Ryan Cohen, who rescued the company and has been instrumental in the margin improvements and the cost cutting, which has led to these positive ratings in terms of quantitative analysis. But we'll go on. GameStop GME will continue its path to oblivion with its new unimpressive leadership. Well, he has quite a good track record. But, facts aside, shares dropped 1% on Thursday afternoon. They certainly did. We'll check in with that in a moment. The video game retailer announced the appointment of Chair Ryan Cohen on Thursday as Chief Executive Officer after Matthew Furlong was terminated in June. Cohen, who will not receive compensation for the job, founded Chewy. So that's two big wins. You've got somebody who knows the business intimately and what's required of them in the role in particular, and they're not taking a salary. They'd expect it to be quite a large salary too. So that's a very positive endorsement of his in the company, and he himself has a very strong track record, as we mentioned. The appointment of the controlling shareholder reflects the difficulty GameStop has had in attracting competent executives, quote unquote. Michael Pachter and Nick Mackay wrote in the 28th of September in a note. Cohen was elected to the position by the board of directors. Obviously, they have his support of the board, which consists mainly of colleagues from Chewy. Well, he knows them. This isn't some secret cabal or huge conspiracy. He knows them and he understands them, and they have a partnership. So, but I understand that this particular analyst is very negative, suggesting his appointment was more of a coronation by his believers. Okay, well, I mean, I could be signed up to that same accusation. But at the same time, I'm here reading out the news itself negative at the start of a GameStop video. So I'm engaging with both sides of the debate. I'm looking for valuable information in this article. And of course, I expect we'll talk about it in the comments. I'll be there trying to piece out the bits of value here. But it's a difficult accusation to refute that you suffer from cognitive dissonance, especially if you're in the GameStop movement, because you've never really had the argument that you bought GameStop because, quote unquote, it was a good idea, right? It was much worse from any fundamental analysis perspective 2 years ago than it is now. It's got plenty of money in the bank. It's managing to increase the margins, reduce its costs. It's closing unprofitable divisions, and it's exploiting its stock in the best possible way it can under very challenging macroeconomic conditions. There's plenty of ways of attracting competent board members with huge salaries. And Ryan Cohen is very much a competent board member who's taken no salary. And so it doesn't need a cash payment, nor does it need dilution to the stock. And that seems to be in line with the cultural attitude that the shareholders, who also in partnership with Ryan Cohen rescued GameStop. So from a fundamental perspective, things are on the up and up, and it's hard to completely put this article in context without acknowledging the other side of the story, even though there are those that will suggest then we are suffering from pathologies that control our beliefs. So GameStop's shares have been subject to the trend of meme stocks, aka weak spots, surging and dropping dramatically as investors react to social media. Well, I mean, I'm going to have to go to the charts because the surging and dropping dramatically, that's not the full picture. We'll get it onto the 4-hour time frame. I'll put the drawings, turn the drawings off. So while it's true to say there have been large, I'm not on the right screen here. That would be this one. Yes. So while it's true to say that there have been large increases and retracements in the share price, you can see that the surge, right? That's the top side moves. And we can measure them in a very basic sense, very rudimentary way, using the incline on these lines, right? So I'll draw these. You can see them all being accurately put on the charts, right? And this is just a subsection of them. There's plenty, right? There's the incline on the increases in the stock on GameStop. And we talk about how the price on the channel here, we talk about how it's likely to explode when it's about to make a move. And that really is why they talk about the volatility. It's because of this huge angular, the tiny angle on this massive, massive rise, right? So the fact that GameStop can go so high so quickly, travel such a far distance in such a short period of time, that's the surge. On the other hand, this is it going down, right? There's the high to the lows, the other way of looking from instead of the low to the high. And this is just like, that's the same period of time we covered on the other way around, right? Now, you'll notice that, of course, these, while also, these are all to the downside, you'll notice without much, if this was a building, it would fall over, right? This is not a very well-designed building. They need to get architects on the phone. The point I'm making is, yeah, sure, it does surge to the top side, but the declines in price are nowhere near as steep as the rises. So they are counter trend and as such happen quicker and are not sustained. So just to accurately get to the point that was being made in the article, stop saying it clearly, so I will for them. So shares subject to the meme stock phenomena, yes, fair enough. Down 38% over the past 12 months. That's true. 38% over 12 months. If you bought it back a few bucks, that's irrelevant to you. If you bought it at a few bucks and you're holding it forever, that probably isn't too relevant, but you do want to see it move in the other direction. Wedbush, pardon me, noted that executives at GameStop have not stuck around long. There has been a transition in more ways than one. We are unaware of any recruiting activity and can only surmise that the company could not convince any competent replacements to jump onto the sinking ship. The lack of clear direction and the callous termination of Mr. Furlong all but ensures that Mr. Cohen will have difficulty in surrounding himself with competent colleagues going forward. So that's an opinion, right? That opinion derived from their understanding of the termination that Matt Furlong. But the termination of Matt Furlong isn't only to be put in the context of how other future potential employees would view how he was treated, right? When you interact as Ryan Cohen with Matt Furlong, you're interacting with Matt Furlong, the man in front of you, not some random hypothetical future employee who you're going to need to impress by proxy in your treatment of this character in front of you, regardless of their performance. And so from Ryan Cohen's perspective, he probably wasn't thinking about that. He was probably actually thinking, I am determined that GameStop will improve in specific areas. That requires a set type of leadership, and it requires it to be implemented as he understands it in a specific way, or at least specific objectives be prioritized. And he believes that the best person for the job is himself. He also is willing to do it for free. So I don't think that this is a holistic take, but let me know your opinion. This chap, he's very free with his opinion. The firm also said that GameStop initiatives have failed spectacularly, right? So a spectacular failure, it's 38% over 12 months. I can show you spectacular failure, right? I can show you spectacular failure. I mean, this is very, very bad words to be saying, right, about a stock that's 38% over 12 months. Okay, so 12 months. 12 months ago. This time last year on PayPal, there's 48%, right? That's, oh, you can't see it because I'm on the, that's 48% decline. That's PayPal, right? You know, you could be talking, like, these articles are about GameStop that are very, very patronizing, but there's not got the same thing on this, right? Look at that. Like, who's talking about this? This, you know, it was trading at $300 plus, and now it's down 80-90%, right? You know, that's PayPal. So it's very patronizing. Still, there's something to be learned from these, from other people's opinions here. We're about to get onto the charts, but just beforehand, finish up on these thoughts here. So the firm also said GameStop initiatives have failed spectacularly, including an effort to be like Amazon. Can you imagine that GameStop's business plan, you know, they whip it out, right? The secret little group of cabal of executives who shun other board members and put off future employees, right? They've got a little corner of the lunchroom to themselves. Ryan's obviously at the head of the table. It's a picnic desk or whatever. And they've got the lunch boxes and he's like, well, I've got them flipped up so that, you know, none of the other CEOs can see, or the board members can see what they're saying. And they're like, guys, we've got the business plan ready. Do you want to see it? Flip to page 4. And it says at the top, says, be like Amazon. And that, you know, that would get you fired. If that would get you ridiculed, laughed out of the, you know, people wouldn't take you seriously if that was the words you would use, right? If you were to articulate your business objectives as be like Amazon, right? That's maybe how you might describe it to someone who wasn't really interested in GameStop. They might say, why? You're still interested in this GameStop thing? You say, well, they're actually trying to be quite legit now with what they're doing in terms of fundamentals. And this chap, Ryan Cohen, seems to have his eye on the prize, right? And essentially, they're trying to be like Amazon. You might say that to your granny. It's not a legitimate analysis of a company. You can see what they're like from looking at any video I've made ever. And this is not serious. So this is what they say. They also say the recruitment of since departed Amazon executives, like, so the point being there that they didn't turn into Amazon, one of the largest companies in the world yet. Well, even Amazon was making a loss for 11 years or something, you know. Guy had to live with a lot of books. Didn't do him any harm though. With no experienced retail executives to advise him, we suspect that GameStop will continue its path to oblivion. If you've seen that movie, it's not bad. The analyst said, we remain convinced that GameStop is doomed. Okay, so I thought, right, so they had already had this opinion. That explains a lot, actually. So we remain convinced. They were already of this opinion that GameStop is doomed. As declining physical software sales, well, you see, again, they point out here declining physical software sales. Physical software sales means buying your software on a disk, typically at a shop, maybe it would be GameStop. And they speak to the decline in that market. But is it a terminal decline? Because you might be aware, if you play games or download games, that in order to get every game, you need multiple clients. And that doesn't necessarily mean you'll have always persistent, immediate access to all your games because of the space they take up or the capacity to have all of these different clients on the go at once, or where it is that you get access to them. And there is a degree of flexibility and portability to having your game on a hard disk. It's also true to say that frequently non-physical software sales are subject to future updates or changes, which might not be to your liking or up to you whether or not you take them. It might also be true to say that much software in future could be sold on a license. And so there will always be an avenue for and demand for physical software sales. And if that market is declining, then GameStop will, as the largest player, get larger and larger market share, which might speak to one way of turning a threat into an opportunity, because there's plenty of software that is still sold that isn't necessarily something people who the target market for like to buy online. Well, Office 365 Copilot might be sold to enterprise clients and delivered across the internet and switched on for every user remotely. That isn't necessarily true of every version of Microsoft Office or those people who are new to any particular discipline. Sometimes they like to see, touch, and get examples of software being used for loads of different reasons. And it's true to say that as technology and computers take a greater part in all different industries, then it's becoming a greater part of everybody's job to learn how to use various different software programs. I'm sure many of the people watching this show will have had a job at the cheese sandwich factory, where you'll have noticed the increasing encroachment of our hardwired computer friends taking over them jobs. You know, they're coming for our jobs. Even computers get that horrible xenophobia. Anywho, the point I'm making is that there'll always be an avenue and demand for physical software sales. So to speak of the decline as terminal is a little bit premature. The Wedbush analysts have underperformed on the stock, surprise, which has little other Wall Street coverage. Right. So these are the analysts, and these are the analysts which will drive sentiment in terms of the media reporting, will drive expectations with regards to earnings, and will themselves be connected to media firms who are owned by or work for investment banks who sell and buy these shares. And those firms, those investment banks, they make money by buying and selling shares. They want it cheap, they'll say terrible things about it. They want it expensive, they'll say brilliant things about it because they're selling it. And they'll accuse anybody they want to shake loose of cognitive dissonance with regards to either side of the trend, whether they're bullish or bearish. I think there is some value in this article. Let me know what it is. Now into the charts. We'll keep it brief and go to... Please allow this interruption to your public service broadcast from TradeSpotting for this important question. What's going to happen when interest rates get to 7%, the US economy collapses in tandem with China's implosion, and 2 generations or more of American youth are lost to unemployment, and the consumer is crushed by never-ending stagflation? Is that the future for America? Is that coming soon to a neighborhood near you? Check out Rocky Outcrop's video. I'll link to it right up here. Click it. It's yesterday. It's a brilliant show. And the chat box is full of interesting people having a super interesting conversation, which hence is that prompts this public service announcement. Check out that video. GameStop chart now on the daily time frame. You'll likely be aware when you look at GameStop on the daily time frame using the logarithmic chart, you get a very clear picture of the strong regimented downtrend. That is this downward sloping channel. You can see though a very important level on price action, as I'm about to mark out here, these previous lows where we found support when GameStop price action reached these levels. It then broke those lows, as you can see here. It did it twice. It then found support at that level again. And most recently, it's found resistance there. and that level is at $19.50. So $19.50 is the short-term resistance for GameStop, as you can see on the daily time frame. It's also a golden pocket retracement against that prior high up at $27. In order to get to $27, it has to break this downward sloping channel. At least it needs to give it a good test. And do we anticipate that happening from here? Well, the momentum suggests potentially not. It could fall over and go down lower. Price action itself has been trending down on the macro and these tiny, whiny, itsy bitsy daily time frame. We'll talk about it in a moment. But we can see that the target of 1950 is very, very much going to be strong resistance. Then again at $22, historically, it's been a tough area to break below, and former support is likely to persist as resistance at that level, as well as 1950. So you're then also looking at a target and resistance at $22. You can also see that there's a 236 from this previous Fibonacci, which also be in it around where you'd find the 886 from the other direction. And again, you could anticipate a tough time at $24. The prior high at $26.50, $27, that would be tough. And then $34, $35. At that stage, you'd be testing prior highs within the formation, and you'd expect macro resistance along with all of the resistance you see from this prior section of the trend. So that's what we're looking at on the daily time frame, with price action as our lead, with the technicals from the momentum adding a little bit of color to the picture, and then putting this downtrend in context based on the momentum and the volatility. We covered the fundamentals at the start of the show, and this is the technicals to the top side. If you break down, you've got a channel with a basis line to guide you, and you can see that that diagonal meets a horizontal at $13. I can tell you that the historical level of support looking left in at around 15. So you've got current price action at 16.89, 15 for the historical lows on GameStop within this formation. The basis line of the channel at 13, approaching 12.50, and then a very important level looking left where we got the Bing Bong on GameStop at 8, 9, $10, right? 9.50. This is a very important level for GameStop, where a lot of money. 4-hour time frame. Now, zooming into those most relevant candlesticks, which will be interesting to those people still looking for buys or managing derivative trades, and anybody who's looking for the truth and the real story about price action, which price itself will tell you. Bing bong, price is wrong. You can look left and see the reason for this support level at 15 change and the proximity with recent support to that area, the resistance being lower than previous highs, and that being the nature of a downtrend. Lower highs would be met with lower lows in a downtrend, and a lower low from this previous area might be this guy, 1530. So you could anticipate that being somewhere to look to. You can also see then, like we were saying, about the basis line, and that being the next target should the downtrend continue. And as a trader, you would anticipate continuation first. Here's the lows. And it's also true to say that they've got a little bit of a trend themselves on the go, along with these most recent highs. So if price action breaks above 1850, you could get those moves to 20, 1950, 20, 22. And then I expect the picture would update with a lot more data. You'd have a lot more to do analysis on. And if you were to look here and see price action below 1630, which is very close to 1550, then you would look to the lower lows. Basis line at $13, $12.50, and then this $9.50 target. On the 4-hour time frame, you've got the same picture on the daily and weekly with regards to where is the best value to add to a GameStop position. If you were doing that, people would tell you you're irrational, that you don't know how to invest, and they would patronize you and your investment thesis. They would also tell you that PayPal was a buy at $72 and it's currently trading at less than 60. and could well go 47, 37, right? I've got a video on that. You should check it out. It's just out today. So an update to the PayPal analysis that we've been doing a lot of look at recently. But this is the thing. I can tell you as a trader and somebody who spends all day, nearly every day, with my ear to the ground and my eyes on the charts. I look at these tickers, all of them, all the time, and can tell you that people who've invested in PayPal at the top have been hemorrhaging their money compared to people who invested in GameStop at any time over the past 18 months. So it is a little bit unusual this late in the game to still be reading articles like that one and those analysts from Wedbush, especially when there is movies out at the cinemas right now talking about communities like this one and their dedication to changing the world for the better and using GameStop as a mechanism to do so. Remember, and never forget,